Cheers to Trend Day's retail trading team. Today, it's a routine debrief. So, we are drinking wine. We have drunk wine before this because it's rude to drink during the. Even more rude to have to hear my own voice. Rude to drink during the debrief. So, here we are. Yeah, so let's jump right into the warm up review and kind of look at what worked and what didn't today. So I highlighted the key things in this document for the purpose of this video. And the first thing that I want to point out is we did have the initiation of that weekly trade, which doesn't happen every week. So it's an interesting event. And what that's kind of telling us is that that weekly pivot area, by the way, you can view this comment by just clicking on it here when you access the doc, which is in the description. We did have the kind of initiation of that trade. And so what that's telling me is we're going to see a lot of supply in that weekly pivot area, kind of around 39.70. And as we get into the charts, I will show you exactly where those areas are, and you'll see what I mean there. So that's the first thing I want to bring to your attention. And the second is we got it right today for once. Those of you who I am privileged to trade with daily know that we don't always get it right, but today was pretty right. It was pretty spot on. So we did have that bearish reversal on the macro chart, which we'll look at in just a second here, and we did see that if we had the breakout box failure, which you can see was 40.10, 40.25 today, we're probably looking at an extended move down. And so I just want to remind everybody you can access this doc by clicking the link in the description. I don't know if I'm going to say that 10 more times in this video, but I think you get the picture. And yeah, this is updated by 10:30 daily, 10:30 Eastern. And I'm going to get rid of this unnecessary row while we're here. And you can see that the newsletters right now I'm transitioning from review to Substack, and my consistency leaves something to be desired, to say the least. And so, if you're not getting the newsletter, you can come to this document. This is what I use to warm up and to kind of get my bearings every day, and you can see that there. So, just a couple other things I want to point out is first, you see that we did have that VIX move back above 20. We'll discuss a little more in the volatility section why that 20 number is so important. And finally, I just want to bring your attention to these levels for tomorrow. So the bolded ones are the most important, and we're going to look at why those are going to be important moving into tomorrow. And we're going to start with our macro chart here. Bring this over, expand it. Okay, so there's a lot going on in this chart. There's a lot of order flow labs indicators. Again, that's in the description. Not trying to plug it, but that's what I use. They do have an affiliate link you can go and check out there if you want to learn more. But yeah, so what I really want to focus on is first the RSI. You saw we had that minor retreat, but we're still near that overbought area, especially if we are indeed still in a bear market. That's up for debate. And secondly, I want to, and by the way, we're going to point out this RSI on another chart as well. You can see it kind of, this is more the midterm, so we'll look at it short term in a second here. But really the most important thing is I'm not really expecting a squeeze here. So this is an order flow labs indicator. It's called voids and clusters. Basically what that tells you is certain areas there tends to be more rotational action in these what are called the voids, and the clusters are where we kind of get caught up. And so since we fell through that entire cluster above us, I do think we have a little bit of room to rotate up to that 60 area, but I think that as we move through 60 all the way back up to that high, it's going to be a bit of kind of a giant supply zone. We'll look at in a couple other charts the most important areas, but really what I think is also standout today is we have that high relative volume. So this sell-off, high volume sell-off, it's displaying what seems to be a certain amount of conviction. So we really want to respect it and see how far it takes us back. And I'm going to move on here in a second to point out some areas I think we're going to move. But yeah, I just wanted to point that out first on this chart. And we're going to go to the daily real quick, which is a cleaner version of this. So looking at our daily chart, you know, I have some friends who think that this is the beginning of the end of this bull move. In my opinion, really, we've just pulled back to the very edges of this giant demand zone. I don't know if I'd call it a zone. It's pretty wide, but to me, there's still a lot of demand in this market, and so it's going to be interesting to see how we react to this 39.45 area, and even going down to the edge of that triangle breakout, which is I think it's about 38. 75ish now, but really to me this is just a pullback until we start to breach these major supporting trend lines since that breakout. Um, and just kind of looking on a wider time frame, if we look at our weekly chart, what are we seeing? We're still seeing that same inverse head and shoulders. Um, Really, I'm still thinking we're going to confront this trend line. I don't think this is a necessarily a premature retreat. Full disclosure, there's a little bit of prediction going on here. I don't have a crystal ball, but to me, we're still just kind of filling out this inverse head and shoulders. So I'm not really reading too much into this move until we start to breach certain levels. And let's take a look at those levels in our favorite, my favorite at least, chessboard chart. Okay, so the new primary demand zone to me is right where we are. We're right near that prior week value area low. It's that 39.35 to 39.45 area. And what I really think is in play here is this 39.20 gap in SPX. So I personally think we do have a little bit more downside, but it's going to be interesting, really intraday, how we react to that 39.20 gap. I think that we'll probably address that tomorrow, and that's really going to be how I structure my decisions for tomorrow's session. The primary supply zone, like I said, it's really all the way up here. If we had to pick a certain level, I would say it's 39.90 to 4,000. So it's probably where we start to retest uh, this cluster of TPOs here in this 3,900 to 4,000 area. You can just see we have a bunch of different MGI market generated information stacked on top of each other all through this zone. So like I said, the retest of the triangle breakout is somewhere down in here around that 38.90, probably about 38.65. Again, I'm not really sure what that trend line is, but somewhere in this area where we have that prior week low, we have that monthly value area low, and we have that prior month POC. So these are some really important MGI levels, MGI's market generated information down near the edge of where we broke out of that triangle for the jobs report last Friday. Was it last Friday or the Friday before? Uh, can't keep track these days, but yeah, that level. So if we move on to kind of the volume look that we have for the week outside of the TPO. I don't know if you guys can tell, but I'm looking at more charts. So these I think these later videos are higher quality. That's kind of why I'm still experimenting with the time. I just feel like the more time that I have to kind of look at stuff, not necessarily it doesn't have to be this late in the day, but as the day goes on, it just provides better insights. When I'm in the middle of trading during the day, I'm kind of just trying to push the content out. Whereas when it's more of a part of like my homework analysis, I just feel like it benefits everybody. And that is the second time I'm going to make the excuse for being inconsistent. But there you have it. So yeah, so what we're looking at here is what I'm seeing is kind of a double distribution build out on this weekly time frame. So like I said, I think that for the rest of the week we're going to probably fill out from like 40 to 80 area. Maybe we're going to make some escapades near that 4,000, but I do not necessarily see us testing that trend line this week, and that's just because of what this double distribution, in my opinion, is implying. So we'll watch. Like if we do get that move to 4,000, a quick move above, that's very initiative. That's telling us that we're accepting into the what is currently the value area low of the week, and we're pushing higher. So kind of be watching that 4,000 level. If we do start to make any type of move, and yeah, so going back to the RSI that we first talked about on the daily, if you look at the RSI on the shorter time frame, you can see we were in areas of a pretty overbought, definitely high bullish sentiment. To today took us into the oversold area, and we're actually I think the most oversold that we've been, let me just double check. Yeah, since at least since the 13th and possibly even since the 10th. So it's a decently sized pullback, and that's why I said that it's going to be important to see how we react to that 39.20 gap in the morning. Um, but just kind of another thing that I'm seeing on this chart that adds to the bearish sentiment is so this ATR average to range is another order flow labs indicator. We had a significant breach today. You can see like most of the time we do kind of hang out near the bottom of it. We don't necessarily breach right through it. And today you saw a very strong move through. So if we look at the expected move calculation as well, uh, 39.52 was the outlier level on SPX today, and we did close far below that. We closed at about 28, and so what that's telling me is there is strength. This is a real move to be respected, and we need to assume kind of neutral to bearish until the price action tells us otherwise. Or at least that's what I'm doing, because obviously this isn't trading advice. Blah blah blah. Disclaimer. You know the deal. Okay, so that takes us to our final chart. Volatility. And we had a big move today in volatility, so you would think that I'm taking this as, you know, bearish. We're gonna continue. Not necessarily. And really until we breach today's high at about, let's say, 22, that 22 level, to me this is looking pretty double toppy. It was we closed kind of in the excess of volatility today in terms of the order flow labs pivots are concerned, and really until we start making that higher high, I'm going to be looking to first buy that gap, or at least kind of go. So really, if we're talking strategy, I'm going to be looking kind of for that iron condor type look. But I'm not expecting. Let me put it this way: I'm not expecting another outlier move tomorrow. I'm not expecting a squeeze one way. So I'd be really surprised if we have a big up move tomorrow. And yet at the same time, I'd also be pretty surprised if we had a significant down move. Again, that's until we start making higher highs in volatility. 22 is the first sign of trouble, and then we'll address 2270 tomorrow if we do indeed have some type of continuation. And I just want to point out, uh, since the beginning of the bear market, I have this written down, that's why I'm laughing. Since the beginning of the bear market, the VIX dropping below 20 has triggered the next sell leg. So we did close today above 20. That was highlighted in that warm-up document. And we really need to see if we continue to move higher, or if this is a false break of sorts in the VIX, where we do fall back below, we do start to move lower. And yeah, so the question is VIX trying to bottom here? Or are we going to get rejected at 20? Another thing I've written down here. I'm really desperate to call the bottom if you can't tell. I think I called it on, I believe the date was October 9th. It's either the 7th or the 9th. And then that was right before we had the low in volatility. So my friend Ernie likes to razz me for trying to call the bottom being wrong. Uh, I say that it was within the expected move of right or wrong. So I need to uh, prove my credibility again here. So that's my disclaimer before reading this as well. So I do think that the bear market ended on October 13th. Um, and so if the VIX remains depressed, and I do consider below 20 to be that depressed level, we'll give it 2021 range, um, we'll give it a certain amount of room. I still think we're in that bull market. We're just kind of pulling back, recharging at least midterm. Long term, I do think that we'll see much lower levels, but I think that it's more of a secular bull market versus cyclical. And my headphones turned off there because I'm getting to the realm of I barely know what I'm talking about. But I do think that we're going to see kind of some chop, maybe not necessarily higher highs, maybe higher highs before we do have that big leg lower. So this secular bear market, I believe, ended on October 13th, and we're going to be watching that major trend line. So I'm going to flash that weekly chart again real quick. I still think we're watching this trend line, and I think eventually you're going to see us push through and go explore maybe some of these supply zones a little higher. Again, it's that inverse head and shoulders pattern. if we do indeed start pushing below 3,800, that is definitely going to change things. Yet until then, I'm still looking to find the right spot to be long on these dips. Obviously, it's day to day. Today was pure bearish. I wasn't trying to buy the dip anywhere. We are, or I am, I should say, and the people I trade with, we are day traders for the most part. Yeah, it's important to keep the big picture sentiment in mind. So just to conclude with some announcements, like I said earlier, I'm moving from Review to Substack. Review is shutting down. Um, I am bullish on the Elon Twitter purchase. However, yes, that is a little inconvenient, but we're moving to Substack, and so the newsletters, I'm going to try to get them out. But again, a lot of the stuff is I'm trying to do this during the trading day, um, and anything that is involves technical stuff. I can't say I'm the most technically savvy millennial, so please bear with me, be patient as I get this set up. We will get to consistency. I just want to recognize again and apologize for being inconsistent. Um, I'm just trying to find. Uh, I'm trying to figure out what works best for me, and also what brings you the most value, just so it's worthy of your time. And I want to be a good use of my time as well. And that's all for you today. So, as always, feel free to respond to the emails when I do get that Substack newsletter going. And until then, you can definitely tweet Routine Trader and his 65 beautiful followers on Twitter with your thoughts. So I'm also happy. I'm also happy to answer any questions that you have in the comment section of this video. And if you enjoyed today's content, please do give it a like to help with YouTube's algorithm. I picked that up in another YouTube video the other day, so you're going to start hearing that at the end of these briefings and debriefs. So regardless, until tomorrow, I look forward to talking to you and stay classy until then.